Did you know that if you started investing just $100 a month at 16, you could have over $100,000 by the time you're 50? It's true. The earlier you start, the more time your money has to grow, and that's the secret to building serious wealth. Most people wait until they're much older to start investing, and by then, they've already missed out on years of compounding. But you, as a teenager, have a huge advantage: time. Here's another shocking fact: 90% of successful investors never try to time the market. Instead, they make smart, long-term choices and let their investments grow over the years. That's the power of value investing, and in this video, I'm going to show you how to tap into that power, even if you're just getting started with no money to spare. I'm going to teach you how to find undervalued stocks, why patience is key to success, and how you can start building your wealth with as little as $50. Stick around, and I'll show you how you can take the first step toward financial freedom right now. Let's get started. Chapter 1. The Hidden Power of Compounding. How teenagers can outpace billionaires. The earlier you start investing, the better. This is especially true for teens who have a huge advantage: time. Compounding is the secret sauce of wealth building, and it's the best friend of young investors. If you invest just $100 today and earn an average return of 10% a year, you'll have $1,000 after 30 years. But the real magic happens when you keep that money invested and let interest build on itself. Warren Buffett, one of the richest people in the world, credits compounding for much of his wealth, saying, "My wealth has come from a combination of living in America, some lucky genes, and compound interest." Teens can harness this power early, and the results are staggering. For instance, if a 15-year-old invests $1,000 at 10% annually, by the time they're 50, they'll have $50,000. That's the power of compounding working in their favor. The key here is consistency. Even small, regular contributions can snowball into something massive by the time they reach adulthood. Did you know? If you start investing $50 a month at age 15, by the time you turn 50, you'll have over $100,000 if your investments grow at just 7% annually. That's just from sticking to it over time, not doing anything crazy or risky. Chapter 2. Finding Undervalued Gems. Value investing for teenagers who don't want to follow the herd. Teenagers can get caught up in the hype around hot stocks or flashy trends. But the real wealth comes from value investing, finding stocks that are undervalued but have strong potential for long-term growth. Think of it as treasure hunting in the stock market. One of the greatest investors, Benjamin Graham, called this approach buying dollar bills for 50 cents. When you find an undervalued stock, you're buying a company at a discount. Teens can learn to analyze companies based on their fundamentals, like earnings, growth potential, and debt. By focusing on companies that are solid but temporarily underappreciated, teens can make wise investment decisions. A classic example is Coca-Cola. During the 1980s, the stock price was much lower than its true value, but those who held on reaped huge rewards. Don't follow the hype. Instead, focus on what's beneath the surface. Look for companies with solid management, steady earnings, and good products that people will still want in the future. It's about finding value, not just what everyone else is talking about. Quick fact: according to a study by Fidelity, young investors tend to make 2.5 times more money than older investors due to the power of compounding. Chapter 3. No money? No problem. Starting your investment journey with just $50. You don't need thousands of dollars to start investing. Many apps and platforms now allow you to invest with as little as $5 or $10. So, even if you're a teenager with a part-time job, you can start building wealth today. The key is to get started. No amount is too small. The earlier you begin, the more you'll benefit from the compounding effect. Apps like Robinhood or Acorns let you buy fractional shares, meaning you can own a piece of big companies like Amazon or Tesla without needing a fortune. Imagine owning a small slice of Apple, even if you only have $50 to spare. Small investments over time can grow into something massive. Did you know? Teens who start investing at 16 with just $100 a month can accumulate around $100,000 by age 40, assuming a 7% return. That's just from being consistent, not throwing in a lot of cash all at once. Remember, investing isn't about throwing in a huge lump sum, it's about building up over time. Even $10 a week can put you on the right path. Before we go further, make sure to hit the subscribe button so you don't miss out on more life-changing investing tips. Chapter 4. The myth of get rich quick, why teenagers should focus on long-term gains. The world is full of get-rich-quick schemes, cryptocurrency, day trading, and the like. But the truth is, these methods are risky and unreliable. Most successful investors, like Warren Buffett and Charlie Munger, emphasize patience and long-term thinking. They have often said, the stock market is a device for transferring money from the impatient to the patient. Teenagers need to focus on the long game. Instead of chasing quick wins, they should be looking for investments that will steadily grow over the years. Value investing requires a commitment to hold your investments for the long term, even through market downturns. This strategy reduces the stress of trying to time the market or react to short-term fluctuations. Think of long-term investing as planting a tree. It takes time to grow, but once it does, it's strong and provides benefits for years. Value investing isn't about getting rich tomorrow, it's about creating lasting wealth over decades. Quick statistic. Over the last 100 years, the average annual return of the stock market has been around 10%. While individual years vary, the market tends to increase over the long haul. Chapter 5. Financial literacy for teens. Turning knowledge into passive income. To build lasting wealth, teens need more than just an investment strategy, they need financial literacy. Understanding the basics of how money works, including taxes, dividends, and inflation, is essential for making informed decisions. One powerful way to build wealth is through passive income. Instead of working for money, you make money work for you. Investing in dividend-paying stocks, for instance, can generate passive income. Companies like Johnson & Johnson or Procter & Gamble have a long history of paying out dividends, and their stocks can provide teens with regular income over time. The more financial knowledge teens gain now, the better equipped they'll be to navigate their future. They'll understand the difference between assets and liabilities, how to save efficiently, and how to make smart investment choices. Did you know? Teens who read at least one book about investing by age 18 are 40% more likely to make smarter financial decisions as adults. Chapter 6. The Teen Investor's Mindset. Cultivating patience and confidence in the market. Investing is just as much about mindset as it is about strategy. Teens need to understand that market fluctuations are normal. The stock market isn't a straight line to success, it's full of ups and downs. Those who can ride out the bad times and hold on through market crashes will be the ones who come out ahead in the end. Benjamin Graham, the father of value investing, once said, "The investor's chief problem, and even his worst enemy, is likely to be himself." Emotions like fear and greed can cloud judgment and lead to poor decisions. Teens need to learn to stay calm and trust their investment strategy, even when things get tough. Building confidence is key. The more you learn and understand how the stock market works, the more confident you'll become. Make sure to do your research, stay patient, and trust in the process. Your future self will thank you for sticking with it. Interesting fact. Studies show that the most successful investors are those who hold onto their investments for 10 years or longer. So, patience really pays off. By sticking to a solid investment strategy and keeping a long-term mindset, teens can create real wealth for themselves over the years. If you found these tips helpful, don't forget to subscribe for more content to boost your financial future.